you're going to see a boom here that will end all booms. This is going to be the biggest mining boom the world's ever seen.
Craig, it's good to see you again. Thanks so much for joining me in the studio here.
Jay, absolutely thrilled to be back.
Okay, so there's like a million different directions that I want to go inside this conversation, but right before we hit record, we were just kind of chatting about the health of the market today, like the precious metals and broader metals bull market. And we discussed that we'd watched a couple kind of false starts roll out in 2016 and 2020, but this one doesn't just feel different, but it's unfolding differently. And I would say far more textbook. You've been in the industry a long time. You've had a lot of success building several companies in many different commodities. And so I always want to start here. I want to pull your interpretation of this market out, and where are you seeing opportunity right now?
Yeah, it's a good point. You know, we've seen a lot of head fakes, false starts. Of course, this time's a little bit different because you're seeing record prices in every commodity that's important to us. And I think that's the major change. And this time around, last time, you know, if you go back to 2016, 2020, they were really market moves in a way. You know, you saw metal prices increase and people got behind them. Of course, COVID in 2020, everyone's sitting at home trading stocks. I think, you know, and market forces, you know, retail market investor attitudes are always critical on those things. This time around, it's a little bit different because it's based on fundamentals. Imbalances of supply and demand, massive increases in demand for all commodities, particularly gold. And as an example, we've seen gold go to all-time highs. I was reading a TD Bank report this morning that gold has a mystery buyer out there. I suspect we know who it is, and that's these particularly like Tether, you know, gold-backed tokens. So we've seen from the start of the year, there were $2 billion worth of gold-backed tokens on the planet. Right. If you go back a month ago, there's now $20 billion, and that's growing at a rate of knots. So I suspect that's the mystery buyer. It's reserve bank scale buying that we're seeing out of them. Reserve bankers have been lying to us and, you know, for years now saying they haven't been buying gold, but they're desperately concerned about the US dollar and where that's heading. And you're seeing that in the bond market today. I think that, you know, the gold price, that new buyer, central bank demand. Of course, if you go to Costco and try and buy an ingot of gold now, it's incredibly hard to do. They sell out immediately. So people are concerned. So you've got fundamental demand drivers there, again, offset by that, you know, not a total lack of work, but largely not enough exploration, not enough permitting, not enough, you know, studies and development type work to keep up with demand out there. Copper's an excellent example of that, and we can get to that, but silver's the same. So I think this time round, this market is based on fundamental supply-demand imbalance. And that's a long-term factor because we haven't done that work over the last 14 years of this downturn we've been in, that you're going to see that imbalance really drive metal prices higher for the longer term, keep them higher for the longer term. And there's no way we can meet that demand that's there at the moment. And hence you've seen metal prices rise strongly. The other thing that, of course, is happening that's sort of writ large now is that in the last 6 months, thanks in part to Trump's tariffs, is a real change in government attitudes around the world. To, you know, to our shock and amazement, Canada's pushing forward with development and permitting of projects and trying to accelerate permits of projects. You know, NextGen, of course, a company I was involved with, that's you know, of national significance, the Arrow project. I think we'll see permits come from that soon. Skino, you know, another company I'm involved with, you know, we're eagerly awaiting. We've now negotiated an IBA that's set for ratification by the Taltan. And the provincial government said that they'll issue a license very soon after that. So you've seen a massive change here. You've seen the change in the US. You've seen, you know, we're about to see silver added to the critical elements, critical minerals list there in the US. You're seeing more and more of that out of the US. Mexico again, where we're heavily involved and invested in the Panuco Silver project at Vizsla Silver. They've been incredibly cooperative, the permitting authorities there. That I can't emphasize enough how much of a dramatic change of attitude you're seeing from governments around the world. What that means for an explorer and a developer is that you can go from that discovery through development and on into production, or you're a chance of getting into production. Now, a lot of investors in a lot of places around the world, I think, you know, have played the market hope for a discovery, and then, they'll sell out in that sort of trough in the Lassonde curve, as we talk about. This time around, I think you're a chance of seeing investors coming in during that trough in the Lassonde curve to stay invested, because you're going to get your permits finally.
Right.
So that's a dramatic change. So I think you're going to see a boom here that will end all booms. This is going to be the biggest mining boom the world's ever seen, partly driven by that underinvestment in the sector over the last 10 or 15 years, and partly driven by the fact that there's now good, strong potential to develop these projects over the next 5 or 10 years. It's still going to take you a long time. You've still got to do all that hard work, all that consultation with First Nations and stakeholders. So we're not going to see a quick supply response, but you're going to start to see a supply response in the next 5 to 10 years. So I think for investors, and me personally as an investor, I think that the next 5 years are going to be a very, very sweet spot for our industry and for our market. And, you want to be deploying capital right now and getting set, because things are going to get better from here. I don't think that this is a head fake. I don't think that the markets are going to come back. We might see a pullback in metal prices sometime next year, but I don't think so. I think that we're going to see this, and this is going to, this bull market is going to run for a very, very long time. I've never been more excited. I think that this is, if we were to put this in a time horizon, comparing it to the last market, I feel like we're in about 2005, 2006. Okay. And it wasn't really till sort of 2009 that we saw things really take off. And I think we're at the earliest of stages. I know some investors are thinking, oh, this looks a bit crazy. I think it's, we're right in the, first few minutes of the game here. We've got 3 periods of hard hockey to play. Oh, yeah. And we're going to come home with the Stanley Cup as an industry. Yeah.
It's such a relative game, isn't it? Because relative to the last 14 years, yes, you could say the industry is getting a bit hot, which is that just means it's turned on again, right? To a degree. But relative to 2010, relative to 2011, even 2012, the gold price had begun to correct, but the market was crazy. I just remember the industry events, the people in the business, the opportunists, the culture was so vastly different in 2010, 11, and 12. And that's, if you've seen that crazy market, then you know what is occurring today is actually very sophisticated and calm relative to that. Now, you mentioned the coordinated shift in government policy. And this, I say coordinated because we're seeing it all over the world. Politicians and government leaders who historically for the last 12, 14 years were vilifying the natural resource sector 100%. Are suddenly supporting it. I'm curious as to why, right? And is this a consequence of the industry's been starved of capital for 14 years, as you mentioned, largely because people were so attracted to the speculative growth stocks in the US, the Mag 7 and the like, and capital's finite. It can only go so many places. And that was an industry that was generating returns. So it stole all the available capital. And the natural resource sector was somewhat starved, but as a consequence of not investing in future supply, we don't have any, but the demand's still there. And that opens up this big supply demand gap. That's why prices are increasing and investors are now beginning to realize that. But it strikes me as sort of a perfect storm in that we've been starved of capital. Now we're undersupplied. And now that's meeting 2 things. One being you referenced global decreasing trust in the US dollar, and that's pushing interest towards gold and to silver. But then in addition, these growth companies that we financed for the last 12 to 14 years, well, now the future they promised us is dependent on the ingredients that we didn't invest in, right? They don't have the copper, the nickel, the energy metals. They got to go backwards and figure that out, right? Is it politicians kind of recognizing that scenario, or what's your take, Craig?
Well, I think firstly, politicians have been caught flat-footed. We've had, like you say, the whole world's been against the sector, and I don't think that we do as a good job as an industry of explaining what we do and the importance of our business. There's no life on Earth unless we have mining, really. Yeah, it'd be a pretty feudal life, and people had forgotten that. But of course, this electrification revolution that we're going through sort of prepared the public and politicians' minds but I don't think that they really considered how much, what we as an industry need to do to respond positively to it. We're starting to see that now, that the attitude, caught flat-footed. Trump's tariffs changed things dramatically. We realised that, okay, well, we can't rely on providing services to the US anymore,
right,
to fund our budget deficits and tax bill. We really need to see projects developed. And so there's been a real pivot, and it's really that sort of, I think it was coming.
Yes.
But that Trump's tariffs have really catalysed in politicians, particularly minds.
Sure.
The other thing, you're seeing the green movement. When I first moved to Canada in 2016, everyone hated uranium. No one thought that the uranium business was going to be viable longer term, and a lot of people were trying to shut it down. You're now seeing, Greens parties and green NGOs wanting to see uranium projects and nuclear energy projects developed. So there's been a massive change in public mindset over the last few years. I think particularly with the take-up of EVs, it has been a good start, but generally as well.
Let me ask you more about the uranium sector while we're on it. I mean, you've been directly involved. I mean, you've personally created an immense amount of shareholder wealth in the uranium sector through the creation of NextGen Energy and ISO Energy. Public sentiment's shifted a lot in the last 4 years, and uranium is no longer being vilified, right? Like it used to. People are beginning to understand, actually, an emissions-free, zero waste energy source is a good thing. Where is the opportunity right now for people looking at the uranium sector? What stage, what company, jurisdiction, what strikes you as a good place to look?
Yeah, great question. Look, I still think it's pretty hard to go past the Athabasca Basin in Canada. You've seen a commitment from the Canadian government to advance these projects. NextGen's obviously in deep discussions at the moment with the CNNC and getting a good positive response. I personally haven't invested much in Africa over the years because I find it a challenging jurisdiction and, very sort of changeable. Once again, you've sort of got to, I follow those 3 rules of thumb: size of the prize, cost of the test, chance of success. Athabasca has all of those big deposits, very high grade, a lot of deposits, excellent geology. So, there's no better place than Canada to invest in the uranium sector. And there's that's one of the interesting things about, of course, we're heading into the sort of restart post-summer. Beaver Creek next week, the big conference there. I think probably the best conference to be at for investors. One of the things that's going to be very apparent to investors there is that there's so much good geology at the moment. And if you're going to look for uranium, you may as well go where the rocks are good, and that's the Athabasca Basin. Still love NextGen Energy. Lee and Chris McFadden and the team there are doing a fantastic job. ISO Energy is looking interesting. I hear that this sort of M&A interest is starting to kick off in uranium. We haven't really seen that. So I think that's about to change. So, Canadian explorers and developers is the best place to invest in the uranium space, I would say. Uranium prices, of course, when I moved here, the uranium price was $21 a pound, dropping to, I think it got down to about 2016, 17, down to about $14-15 a pound. Mm-hmm. Pretty tough time to do business. It's now trading at $72 a pound. And I think there's a long way to go there as particularly China, Russia, and the US is now bringing back on. Of course, we saw 3 Mile Island turn back on thanks to Bill Gates as pushing there. So, and there you go. You've got a classic environmentalist that realizes that, we need nuclear power if we're to do this. Mm-hmm. Of course, the US has run up against the problem that data center demand for electricity is now, it's grown way more than any of us expected. So they've got to do something fairly dramatic there to keep the lights on. It's a fascinating thing that apparently a ChatGPT search on your phone uses 10 times as much energy as a Google search. So,
right.
We're going to have to see some dramatic things. But of course, that means, very positive for copper, very positive for silver. It's going to be an interesting time for sure.
Can I ask you, what was your proudest moment in the uranium sector with either NextGen or ISO Energy? Yeah,
well, look, I was a co-founder of NextGen with Lee Courier, Chris McFadden, Andy Brown. Of course, that went very well. We were very, very fortunate to make that Arrow discovery. And that was a wild ride. That was a fun time. And we did that all under the cloak of a bear market, of course. I'll never forget the day. I know exactly where I was when Lee rang me. I was at a winery on a Sunday afternoon in just outside of Melbourne. And he called me and said, well, I think it was hole 14 that we hit on, and I was astonished. I thought, okay, we're off to the races here. So that was exciting, and it continues to be exciting for those fellas. I'm no longer involved, but the most fun, the thing that surprised me most was ISO Energy. I moved my family to Vancouver early 2016. Steve Blower, Wes Short, and I was sort of sitting around a room wondering where to go and what to do. We came up with a strategy. No one wanted ground in the Athabasca Basin. We knew during the uranium market that ground would be worth something. So we just staked and did as many deals as we could, and we went from sort of zero to having the third biggest land position in the Athabasca Basin back in 2017-18. And we thought we'll start selling those projects off to fund exploration in the hope that we'd make a discovery. But to be honest, I had a soul full of hope, but I thought our chances were pretty slim. Steve brought us the deal to get that LaRock property off Cameco. We paid him $300,000. We had a drill rig out there 6 weeks later, and we announced the discovery a week after that. So people will tell you that exploration's, a business of persistence and hard work and suffering and failure. There, it only took us 6 weeks. I think that remains the highest grade uranium deposit of any scale that's ever been found. It's about 40, 50 million pounds at about 30-something% U3O. It was an astonishing discovery. And, one for the record books. That was a heck of a lot of fun.
Yeah, no doubt. You just kind of jogged my memory about a deal that you did with your Inventa partner, Michael Connor, the cobalt deal that you guys put together in 2015, in terms of sometimes you get a quick turnaround.
Yes.
Walk me through that structure, what occurred, what you guys found, and how you took it back to market so quickly. Yeah,
so Mike Connor, my business partner and one of my best mates there, CEO, founder of Vizsla Silver. Mike and I became mates. I think it was actually around 2016, 17, and Mike said he liked the look of cobalt, so we put together a deal. It was interesting. I actually gave him my credit card, and he staked a bunch of ground around a thing north of Pemberton called the Little Gem. I think I put in about 150,000. We raised another 100,000 from various investors, Mike included. The cobalt boom kicked off, and we sold it 12 months later for $15 million, which was, so Mike and I have been locked at the hip ever since. I thought, I'm not letting that fella go.
No kidding.
Yeah, that was a fun one. Nothing much has come out of the project, unfortunately, but I think there's still something to be done there. But cobalt's a bit tricky.
Yeah.
These days we're very much focused on, and really in this order, silver, gold, copper, and uranium.
Okay. Yeah. Okay. And I want to get into copper in a minute. Obviously, Vizsla Copper, there's a lot going on there. One last company I want to touch on before we do. I want to touch on the Eskay Creek mine. Yourself and Walter Cole bringing that back to life.
Yep.
For anybody who's not familiar, I had a great chat with Walter in studio about a year ago, shortly after you guys had raised $1 billion to put the Eskay Creek mine back into production. For somebody who's got zero experience with that asset and what you guys are doing, could you walk us through this, Craig?
Yeah, see, that was another funny one. We had to make some board changes back there, sort of, around sort of 2018. The incumbent board weren't sort of willing to let us push the company forward as quickly as we hoped. I became chairman. Walt was already CEO. We made a few changes on that front. Just after we acquired Snip off Barrick, and then we acquired Eskay Creek. And I know I've watched that interview you did with Walt about a year ago. That's Mine Finance 101. That was a spectacular interview, and, people should watch it because it's a masterclass, really. Snip was interesting. We thought, okay, that's 1 million ounces of 12 grams. That's a good chance that it'll be a project. I think it's a bit bigger than that now, but Eskay was the goal. I think we sort of convinced Barrick of our wherewithal there. A lot of people, it was an interesting time because a lot of people said, well, there's no way Barrick will have left much gold behind. But, a lot of the data were in boxes on paper. So we had to digitize a hell of a lot of the data. But once we did that work, and there was a solid amount of work to do, we found, okay, well, this looks like there's actually 2.5 million ounces still there. We got to drilling, grew that to over 5 million ounces at north of 4 grams per tonne. And that's one thing for investors. One of the things I like to do is, follow the majors around and acquire projects they've dropped. I started a coal business in Colombia and then Russia doing that, following Rio Tinto. And the other thing is, of course, when you're closing a mine, the geologists are the poor cousins of mining engineers and metallurgists. We sleep in tents and, dig holes to go to the bathroom type of thing. These fellas all need, nice camps and good conditions. And the first people to get sacked when you're getting to the end of a mine are the geologists. And so if there's more ore out there, it won't get drilled in those last 3 or 4 years of the mine. So there's a little trick there that, if you go and look at the data around a mine that's long, hasn't got long left in its life, you can often find a heck of a lot more metal that's left in the ground simply because that work stopped years ago.
Yeah.
And that Eskay Creek's a great example of that. We knew there was a lot of metal still in the ground and a lot more to be found. And so that's worked out now. Eskay's being built as we speak on the permits that exist, but that's going to be one of the world's great gold mines. I think we're going to do about 400,000 ounces of gold a year at AISC south of $700 an ounce. So you can imagine with the gold price, where are we? We're just above 3,600 today.
Yeah.
Walt's going to be making nearly $3,000 an ounce on that project on 400,000 ounces. The cash flow is phenomenal.
That's
phenomenal.
Bonkers.
And Vizsla Silver's the same, Panuco. When Mike and I first went down there 5 or 6 years ago, we were astonished. There's 450 years of mining history in that district, in that area. But it really had no modern exploration. We were astonished with what we saw. So that's a little bit of a different story in a sense. But if there's a lot of mining in a place that's had no exploration, that's a fair hint to go and have a really good look under the cover there.
Yeah. Okay. So, we covered a handful of companies thus far. And the reason I wanted to do that is because you've had a lot of success in the uranium sector and in the gold sector and in the silver sector. You had success in the cobalt sector. I mean, sure, it was a quick period of time, but what did you say? 300 grand turned into 15 million. That's a 50 bagger. It's not bad.
Yeah, in 12 months.
In 12 months. So why copper? Why now? You're now running Vizsla Copper.
Yep.
Reflecting on your past experience in the sector, you got all the options you want, Craig. Why did you choose a copper company in BC?
Firstly, there's a bunch of things about copper because we call it Dr. Copper. We joke Dr. Copper. It's sort of a very solid indicator of macroeconomic conditions, where markets are heading. Generally, what metal demand is coming out of Asia particularly, but globally. And we've seen that. We've seen sort of dramatic changes. The US copper demand shot up there back in March, which drove the copper price to an all-time high. Of course, Trump's tariff changes there continued to mess with that market and see it run higher. But it was that change that we saw earlier in the year was a very good indicator because, of course, there were Panamax vessels full of copper concentrate heading from Chile, from Antofagasta, across to China that turned and headed to the US to play that arbitrage. So the US demand was growing massively, but just generally, it's the deepest metal pool, of course. It's about sort of 24 million tons per annum. I think the iron ore market, when it's higher prices, the iron ore market and the copper market vie for the biggest markets in our sector.
Okay.
So it's the biggest, deepest pool.
That's great context.
So there's always demand there. And it's essential. If you look around, there's hardly a thing in here that's not touched by copper.
Yeah.
Even down to green paint, most of that pigment comes from copper. So it's demanded everywhere. There's wires everywhere. We can't live without copper. So I love that. There's always going to be a base load demand there. They're good deposits to find. If you can find a large, higher grade porphyry copper deposit, or particularly a VMS deposit, you can often build them yourselves. You don't need a major to come in. And there are a lot of deposits out there to be found. There's a good chance of finding new deposits in different terrains of different styles. And we made a discovery 3 weeks ago in Vizsla Copper. So I love that aspect of it. Copper supply side is so fundamentally challenged. BHP talk about copper demand rising by 7 to 9 million tonnes per annum extra demand over the next 5 to 10 years. That's a 30% jump in copper demand over that time frame. Now, if you go back to 2000 or 1999, when I joined Rio Tinto, the copper price was about sort of 70, 71 cents a pound. I moved to Chile in 2002. The copper price was $1.20. No one ever thought that it would go to $4.60, but the metal price rose 6 times over that next 6 or 7 years by a 30% shift in demand, largely driven by a large but localised factor, the urbanisation of a good chunk of the Chinese populace. And that single factor was really enough to drive the copper price up 6 times. This time around, you see with electrification, data centre demand as the swing demand driver, we're going to see a similar change in supply-demand fundamentals, a 30% increase in demand, but we're coming off a $4 base for the copper price. So this is why I say, don't be surprised if we see $20 or $30 per pound copper. You're going through the same fundamental transition, supply-demand change, dynamic change, this time offset against a supply side that's fundamentally challenged. You've seen the big expansions done at Las Bronces, Escondida, if Olympic Dam, BHP's Olympic Dam, if they want to expand production, they have to move their whole production facility, which they spent $4 billion redoing there 10 or 15 years ago. They've got to move that further back and create a pit. So you're talking about, potentially hundreds of billions of dollars of investment from existing producers to keep up with that demand that's coming. And I think some of these projects I just can't see how, given the downturn we've been through the last 10 to 15 years, underinvestment, all of those things, not enough permitting, not enough studies, there's no way we can respond to a serious demand response. Right. And so hence, I think we're going to see extraordinarily high copper prices. So what we've been trying to do is put our foot on as much copper as we can in good jurisdictions, safe jurisdictions where we can hold them. And Canada, now you can permit things again. So I think it's a great strategy, and we'll see how it plays out over the next couple of years. But it's looking pretty good with copper prices, close to all-time highs now.
And you guys just made a discovery a few weeks ago.
We did.
So what is Vizsla Copper to an investor who's just walking in and looking at the story? Is this an organization that's going to uncover something big and economic and take it to market? You mentioned the right kind of deposits, VMS. You can build them yourselves, which I think is important to draw that differentiation, because a lot of investors would say, I understand gold deposits, I understand how they're built, and usually how much money it takes. Copper seems like a completely different animal. It's way more money, way more time. You need a major, you need to sell it. Like, speak to that a little bit for me.
Yeah, that's right. So those smaller, higher grade deposits, much more readily developed by a junior company with the wherewithal. And that's what we've built at Inventor Capital. We had Simon Smirlek join us from Ausenco Engineering, probably one of the, might be the most prolific mine and mill builder on the planet today. I think he's built over 43 projects, him and his team. He had 4,000 people working for him at Ausenco, of course, so that helps. So we're sort of set in a position where we can develop projects, and you're seeing us do that at Panuco, because we'd like to have that development team focused on copper and copper projects. So they're smaller, higher grade, whether they're VMSs, breccia type systems or skarns, contact skarns, much more readily developed by a smaller company. Big porphyry coppers, of course, has been the realm of majors, but what we're doing is taking the view. So when we started Vizsla Copper, we actually started Vizsla Silver was Vizsla Resources, and we were looking for copper. Of course, we stumbled across that Panuco silver project, and that demanded all of our attention. So that went very well, and but we wanted to continue on with that strategy. So we bought a project here called Woodjam, off Woodjam Consolidated. Bill Morton, his team, had made a number of discoveries there. Some of those are higher grade zones, but again, sort of typical BC porphyry grades. I think we've got 2 billion pounds of copper and nearly 1 million ounces of gold at about 0.4% copper equivalent, but all very close to the surface. So, we're taking the view that those things will become not only economic. I think if you put a study around some of these BC porphyries now, they're going to be very economic at today's prices, but also So projects that have, latent value. I think we paid $11 million for Woodjam. We paid $3 million for the Poplar project, which was owned by Vizsla Copper. So for that, we got 4 billion pounds of copper, nearly 2 million ounces of gold at good grade, close to surface. Those things are going to be worth hundreds of millions of dollars as this copper market starts to take off. And that's something that's worth thinking about too, is that we're really only seeing the early stages of this boom, this bull market happening over the past few months. It's been the busiest summer I've had in years. But you're starting to see that happen now. But people haven't, I think we're now coming up to a couple of quarters where metal producers are benefiting from these metal prices. That's really going to drive investor eyeballs, particularly out of the US, back to the sector.
You mean after a few quarters of earnings begin to materialize?
Yeah, that's right. And if we don't see metal prices correct to the downside, then people will have the confidence to really come in a major way. So we're at the thin end of the wedge there now, earliest of stages. I think we're going to see, like the last boom, if you go back to 2005-06, people were trepidatious. But come 2009, people were just, piling into the sector. And so I think we're probably a year or two away from it, but it's going to keep snowballing and growing.
Mm-hmm. Okay. And in terms of next term news flow for Vizsla Copper, think like 6 months to 12 months down the road, what can prospective shareholders expect to hear from you? Yeah,
so we made a discovery there 3 weeks ago, which was great. One of the best porphyry targets I've ever seen. It was a textbook porphyry target at a project we call at Poplar on the southern margin of the property there, Thera. The discovery is called. We drilled 500 meters at about 0.4% copper equivalent, so that was a good start. We've now stepped out, so look out for news over the next few weeks from us as we wrap up that drilling program. But we're getting assays coming back in now, so there's a lot of news to come. What I can tell you is that the Poplar system itself, the existing discovery, and then just to the south of us, Surge Copper has Berg and Burgett. Imperial has the Huckleberry mine down there. The Berg and Burgett particularly are very big. There's 1 billion tonnes of copper at that sort of grade, again, near surface. What we're seeing here is a large system, at least sort of 800 metres east-west by 400 metres north-south. So I think we're going to talk, at some point we're going to be talking about a very, large discovery. So we've got assays to come over the next month or so. We'll have some news for Beaver Creek, as everyone's want to do. And then back end of the year, we're potentially into a major resource drill out there.
Okay.
And then, additionally, we pulled budget from Woodjam. We've got a discovery there called Megaton. We haven't found the centre of that porphyry system yet. We know it's a porphyry system. We want to get back in and test that, but that might be something that we farm out to someone else or one of the majors. Okay. So we'll look at all of that.
And then you could focus on Poplar.
Right. And then, of course, we've got another project down there just north of Kodiak's gate zone called Copperview. This is just outside of the town of Merritt. We're working this up at the moment, but we've got a massive IP anomaly that looks larger than Kodiak's gate zone, which is on the same structure. Kodiak, their gate zone sits just to the south of us. We're 5 kilometres to the north on the same major structure. We've now done IP, fabulous looking IP target. We're getting soil geochem back now, and I think that there's a hint of copper in there. So that's starting to shape up as another textbook and outstanding porphyry target right next door to where they've made their major discovery. So I'd love to see that drill later this year, probably October. It's another good location where you can operate year round. We're waiting on some permits, so we're consulting with the First Nations at the moment. We should have that at the back end of September. And so what I'd like to be reporting to the market by the back end of this year is that we've got 2 major new discoveries on our books. That doesn't happen too often in a junior. So watch this space. A lot of work to do, a lot of drilling to come before we can confirm that. But I think we're a real chance.
Yeah, I like it.
I'm excited.
And the resume should give investors pause and confidence in that vision. Do you anticipate going back to the market for capital? And if so, when? I mean, obviously you will, but when do you think?
Yeah, of course, we'll have to at some stage. We're in pretty good shape at the moment. We've got about $3 million in the bank at Vizsla Copper. I would expect that the back end of this year, we'll have to come back to the market. But we've got good, strong interest. We've got a good, supportive shareholder base. We've had a bit of a bad run over the last couple of years because, of course, those deals that we did with Consolidated Woodjam and then Vizsla Copper to acquire those two companies, there's a lot of shareholders that have been locked up there a long time or in those stories for a long time. There wasn't the liquidity for them to exit. We came along with the team and to some extent provided that liquidity. And so we really got crushed by the nature of those two deals, and the downturn, people were exiting and taking chips off the table. But that's great. I can,
flesh it out, refresh the shareholder base.
Yeah, that's right. And Mike
reset.
And my guys like Dave Schmidt, Simon Smirlek, the team at Vizsla Copper, we just continue to write checks ourselves. I know that there's sort of, there's always some disgruntled shareholders when your share price is going from 25 cents down to 5 cents. Yeah. But as we say to people, it's a cyclical and capital intensive industry. If you don't want to get diluted, write checks, and that's what I do. So, and what I'm trying to say there is that we won't be short of funding because we'll continue to write large checks ourselves, so we'll be in good shape. And that's a company, I want to own much more of, because I think, as I say, if the copper price goes to $20, this company will be worth multiples of where it's at.
Yes.
But what we really, really want is a project that we can develop. And if you look at Woodjam, there's 33 million tonnes in resource at the moment at a grade of about 0.7% copper equivalent at shallow depth. I'd love to flesh that out, and that may be the crux of a higher grade operation as we move into studies and development.
Okay. Look, Craig, it's been great having you on the show and picking apart the market with you a little bit and getting your thoughts on a variety of commodities, not just the one that your core focus is right now, which is copper, obviously. And so I encourage the audience to stay tuned on news flow from Vizsla Copper, but also all the other companies that you mentioned today, right? Vizsla Silver, and I chat with Michael Connert often. We've covered that company on this show for 3 or 4 years at this point. And Skeena Resources, which is the Eskay Creek mine. And it was fun reflecting back on your history and success in the uranium sector. Keen to see what you're going to do with Vizsla Copper, man. It's exciting.
Yeah, look out. I think that this copper view target's, again, textbook, one of the best things I've seen in copper. And, we know there's a lot of metal in that district. So I think we're a chance of making 2 discoveries in a year. But let's see. Lots of work to come.
I like it.
Thanks, John.
All right. Thank you, Craig.
Cheers, mate.